creations and redemptions would be a thing because they wanted that bad and they didn't get it. So this idea that Larry can just make a call is a little defeated by this. That said, BlackRock coming in was an event that just, I don't know, it's sort of like just got everybody going again. And all these filings came in. The real big one was Grayscale. I got to give them credit. So for us, I think we went from 50 to 75 or 90 after, I think Grayscale got us to 90. That was the big one, them winning that court case. Those are the two major catalysts. But then the other one was after Grayscale won the case and right around the Ether futures launching, we heard back channel that the SEC had actually started reaching out to go over the S1s for the spot ETFs and giving them comments. I think that's when we went from 75 to 90. That's when we were like, okay, this breaks the pattern of radio silence, delay, denial, which we've seen every cycle for 3 cycles for a decade.
Yep.
Them talking was like huge. And obviously that proved to be one of the best bellwethers that approval was going to happen, because why bother? Why not just be radio silence, write up your new reason for denial, and then drop it like a bomb on January 10th? The idea that these S1s are now like having all of these detailed technical things going in that are addressing SEC concerns is major. And like I said, they worked through the holidays. What James is saying, though, is why Grayscale is such a wild card. Because and this is where James and I disagree. I think they're going to hold Grayscale back because of the name of fair competition. If you let Grayscale convert on the day one, they come over with $300-400 million in embedded volume every day. That's top 1%. Like if they were an ETF now, they'd be top 1% most traded, and I think top 2% in assets at 20 billion. I mean, this is big numbers. They'd be a faraway favorite, even with BlackRock in the race if they launched on day one. Now, it's still possible, and it's also possible if they launch on day one, they aren't able to maintain that and others catch them. So I'm not saying it's a guarantee they would win the race, but I could see the SEC, if you're thinking we want a fair race, we don't want to play kingmaker. Grayscale is a dilemma. This is a conundrum because they're the ones who sued you. They proved you wrong. You kind of almost in one way are compelled to add them. But on the flip side, well, if we add them, they'll be the biggest ETF probably in this race. They bring a gun to a knife fight. And so this is a fascinating subplot in this whole race. So 11 potentially, but possible 8, 9 make it. We don't know. Two that I think are going straight for retail: BRRR and HODL. And VanEck's commercial was also seemingly more retailish, whereas Hashdex and the other ones seem more aimed at boomers. You're also going to see them aiming at different markets. So there's going to be some people aiming for the do-it-yourself retail younger person, and then there'll be some aiming for the sort of golf-playing wealth manager with khakis and who thinks all this is crazy but doesn't want to miss out. Those tickers are much more sober. So I think that's where the bigger money is, though, by the way. So that's why the BlackRocks and Fidelity's tickers look a little more like just like boring. They're going after the sort of more conservative crowd, but that's where the big boy dollars are. The retail direct, I think a lot of those investors probably left after 2021 mania. They're either over it or they're using Coinbase at this point or something. I don't think we're in a retail frenzy like we were. Maybe it'll come back. I don't know. If the price keeps going up, that could create more retail interest. But to me, I think that it's the advisor network that's interesting. And the other thing on where they store the Bitcoin and how they explain that to you, that actually could be interesting. There's an ETF. I think the ticker is SGOL.
Yep.
It stores the gold in Switzerland because, in 1920 something, FDR confiscated gold in America. And the ones that have a lot of secondary volume, like they trade a lot on the exchange, their spreads are tight. They're very comparable to regular in-kind ETFs. The ones that trade less have wider spreads. So this is also why getting volume is important. I think the spreads, I think, are probably going to be more of a function of which ones get the most volume. So look for tighter spreads in the most traded ones, and maybe the spread's a little wider. But I don't think people notice. And the other reason in-kind is really great is for tax reasons. But according to several people we've spoken to, although I can't say I'm 100% on this, the tax issue won't be a problem. I won't go into the details because it's just too boring and it's plumbing. But one of the two big problems with cash creation is gone. if this is true. So that's not bad. So otherwise, the tax issue would be more of an issue. Just one quick thing for your listeners out there who are like falling asleep or confused. I used to teach classes to new hires at Bloomberg on ETFs, and every time I went over creation redemption, they'd all give me poor marks for that section. So I switched my tactic, and I just told the quick story of the guy who started the first ETF. And this will help everybody a lot understand exactly how ETFs work. The guy who started the ETF used to run a commodities warehouse. Picture a warehouse full of different commodities. Picture a big locker full of soybean oil. Whole time in these. Mm-hmm. It's a good sign though. And then I just saw Goldman was interested in working with Grayscale. If you get these big banks interested to be APs more and more, it's better. It just will create more cost compression of the spread. So I think that was a big question mark, whether the big banks would get involved. So even though Jamie Dimon said that, JP Morgan actually is helping this, this process by jumping in and being there along with Jane Street and Virtu, in my opinion. So if you see Goldman jump in, and why not? I mean, I think it's not going away. And BlackRock and Fidelity, I think, have given a lot of coverage, or what's the word I'm looking for? Cover. For not only people like JP Morgan to get involved, but also the advisors, the wealth managers. If it was just nothing against Van Eck or ARK, but it was just those companies, you might not see the potential. But with a BlackRock and Fidelity, these are historic companies that are, just have massively good reputations and they're already customers of. These are, if a Fidelity or BlackRock fund shows up on a client statement, the advisor has nothing to worry about. Like you can't get fired for owning these funds, right? These are very, very quality areas. So I think that's also why, going back to BlackRock, that was such a huge thing. So for BlackRock, in terms of their interest in Bitcoin as a whole, I don't know exactly how truly they believe it. Probably they do, but there's definitely a business reason for them to do it. And I think that's, at the end of the day, as we look back, that's probably what sparked their filing, to be honest with you. They probably also saw the Grayscale case and said, let's throw this out there like a call option. If Grayscale wins, they might have to approve and we'll be right there. So that in the end, we actually got into theories where Larry Fink was going to withhold giving Democrats money if they didn't approve it. And that's all not true. But because we were theorizing, why would they do this? So we went down a bunch of different tinfoil hat rabbit holes on this. But in the end, I think the real motive was just, look, we're publicly traded. Vanguard, we keep fighting with, our beta ETFs don't make a lot of money. We need to keep finding new ways to grow our business.